Howdy there, folks. I hope everybody's ready for an absolutely insane week in the stock market. And I don't use that term lightly this week. And I'm telling you, this is one of the craziest weeks in the stock market we've had in a long time. I'm going to take you through exactly what's going on, prep you guys for everything that's going on. Basically, Monday through Thursday, insanity. Okay, absolute insanity. By the way, let me know how the audio is on this. I had some complaints, I think it was Friday or Thursday, about audio levels being super low, and you guys had to turn it up super loud. So let me know if the audio sounds good on this. Thank you for the person that helped me in the comment section kind of figure out what was going on with the settings. I have no clue what happened with the microphone. The volume was super turned down. So please let me know how the audio sounds for this, okay? First thing, starting out Monday after the bell, Whirlpool is going to be reporting earnings. Now, Whirlpool's interesting. So this is a stock that is down significantly. It's pretty darn close to its 52-week low. It's got a PE of 6. It's got a dividend yield of over 4%. I mean, this stock looks beautiful. I mean, everybody should know Whirlpool and the brands Whirlpool owns, right? It's almost like a trap, though. That's the problem with a stock like Whirlpool. It looks like, oh my gosh, like this. Whenever you see something in the stock market that like it looks too good to be true, usually it is, just in like many things in life, right? If 4% plus yield, 6 PE. But here's the thing. If we're talking about a major slowdown in big purchases, that's going to hurt a company like Whirlpool, and we could hear that in the guidance, right? If we're talking about the housing market grinding to a halt in the back half of this year, and as we go into 2023 because of interest rates and everything, like we know the real estate market's just getting worse and worse and worse. That's a situation that's going to hurt Whirlpool's numbers. There's no dang doubt about that. So it's unfortunately, as good of a business model as it is, as good of a company as it is, as well run as it is, yeah, and as cheap as the valuation looks, it's a little bit of a trap. And, I think a lot of people are very concerned with not just the numbers Whirlpool is going to report next quarter and the quarter after. They're concerned about all of 2023 when it comes to this company, right? So that's to kick off things right off the bat. Monday after the bell, Logitech reports. Logitech's pretty darn close to its 52-week low. The 52-week low is just under $50. It's at 54 here today, 122 52-week high, so obviously significantly down. Logitech, very good company. I own a competitor to Logitech, Corsair. Here's the deal, okay? Corsair just came out a few days ago. And what did Corsair say? Corsair basically said, like, business is not good. Business is very bad. They missed their numbers. They preliminary guided. If business is tough for Corsair, it's more than likely tough for Logitech. They compete against each other, but at the end of the day, if keyboards and mouse and all the different products these companies sell, if those are selling usually really strong, like it's selling strong for both companies, right? Maybe one outperforms the other one by a little bit. Maybe Corsair does a little bit better sometimes. Maybe Logitech does a little better sometimes, right? But at the end of the day, if business is strong for one of those companies, it's strong for the other. And if it's weak for one of the other companies, it's going to be weak for the other company. And so Logitech likely going to report disappointing numbers. So don't get too excited. It's a really good company, though. Logitech's a very well-run company. Here's the deal. This company, analysts are still expecting them to grow revenue 1% this year. I don't think that's happening. I think they're going to shrink revenue. Looking at Corsair's numbers, I'm like, I don't see any way Logitech's going to grow their business this year, just to be honest. As good of a company as it is, I don't think they're growing revenue. And then next year, they're expected to get back to stronger growth. But this year is what I'm concerned with. I think analysts are going to have to bring down their numbers. I don't think they're going to grow this year. I think they are going to likely shrink revenue. Best case scenario, 5%. Probably realistically 10 to 15% for Logitech, maybe 20% if it's a disastrous year for Logitech, okay? UPS was reporting before the bell on Tuesday. This matters in a significant way if you want to know how the economy is doing, not just in the United States, but they do business international as well. UPS is a big player in the international markets. UPS is going to tell you a lot about that, right? $187 stock here today. It's a great company. We all know that. 3% plus dividend yield, so very healthy yield. But if there's a lot of recession fears, which obviously we all know there's a lot of recessionary fears right now, right? UPS is just in a tough spot, given that sort of environment. UPS can only control what they can control, right? They can control their expenses. They can control how they run their business. but they can't control how many packages are coming through. That's just a bottom line. They can't control, companies ordering products. Like, it's not just a consumer package part of their business. This is a big company that deals with B2B. Okay, so a company that maybe orders a big part or a big machine or something like that, it can be transported through UPS depending upon the situation. So UPS is so much further reaching than I think a lot of people understand or give it credit for. And I think that's just one. I don't care if you own UPS stock, you got to pay attention to their earnings, you got to pay attention to their guidance, you got to pay attention to their conference call and the commentary that's said on that conference call. Okay, 3M also reporting Tuesday before the bell. Really good dividend stock. 3M, this has been a company that's been around since probably BC, okay? It's been around a long time. And when it comes to 3M, 4.4% dividend yield in this stock. Woo, very nice. But here's the deal. Analysts have a one-year price target in the stock of 144. Well, it's 134, so that's not much growth expected there. But this is because of this, recessionary belief out there in the market that, people just figure the back half of this year is going to be rough for a lot of these companies and maybe into 2023. So there's just not much excitement here, but you're getting a rare opportunity because I can tell you guys, for a while, a lot of these dividend stocks were the yields, because the stocks were trading so high, you couldn't get good yield on a lot of these stocks. But now I'm looking out, and there's so many legit good companies, if not, I would say great companies, some of the most well-run in the world, right, that have 3%, 4%, 5% dividend yields now. It's the most attractive time to probably be a dividend investor in a long time, okay? In a long time. And remember, when you're thinking about investing in a dividend stock, whether it's a 3M or UPS or any of these other stocks, we went over a Whirlpool, whatever, right? It's not just about I'm trying to, make money on the stock like as a growth stock, right? You need the share price to go up over time. But it's about collecting that dividend money every single quarter. Almost all these companies pay out dividends every 3 months. Then you go ahead and reinvest that money back into the same stock so the dividends get, even compounded more and more, right? Or you go ahead and take that money and invest it into other stocks out there. So I will say it's, and think about if these stocks fall more, the yield's going to go up even more. And some of these companies, they have some wiggle room. So even if EPS drops, like let's say 3M's EPS drops to $7.50, that would be a substantial drop. That'd be a disaster for 3M. But let's say that happens, right? Well, the dividend yield's under 6, so they still got some wiggle room, right there. So that is something to kind of keep in mind there. Before the bell, the very next day, Wednesday, we got Coca-Cola, we have McDonald's reporting earnings. These are not companies I really care about very much. I've never owned McDonald's. I've never owned Coca-Cola. I just don't, they're not my cup of tea. Let's just call it that, or a cup of soda as we could put it. So they've never been ones that interest me, but those are two massive corporations. Coca-Cola is probably a $270 billion market cap, roughly. McDonald's, I would guess, is probably $175 to $185 billion market cap. Massive market cap companies. Those stocks will move the Dow. They will move the S&P 500. And, those companies, at the end of the day, they're not big growth companies. We know that. McDonald's, big growth days are long gone. Coca-Cola's big growth days are long gone. But those companies, as far as the inputs go to those business models, they've increased substantially, right? And so how are big, massive companies like that have low growth, how are they handling inflation environment, right? How is Coca-Cola handling it? How is McDonald's handling that? We know wages are going up way more. We know every single McDonald's out there has to pay more than they used to pay just a year or two ago previously, right? And never mind that, if they're raising price on product, are they still getting customers to buy the same way they were before, right? So I think that's really important. Then we go to a new level, okay? That's just child's play. All that was just child's play, okay? We go to a new level after the bell on Tuesday, and this is when the pure mayhem starts. $3.4 trillion of market cap is moving after the bell on Tuesday. We got Google, McDougal, and Microsoft both reporting, all right? Now, here's the deal. Google, all eyes are going to be on Google, obviously, because even more so than Microsoft. Everybody looks at Microsoft and it's like that's a recurring kind of revenue business model, going to be stable. If somebody's in this suite of Microsoft products, they're likely not getting rid of that. Even if the operating environment's, let's just call it tougher, right? So Microsoft's kind of one of the safest business models out there from the big guys. Google, I will say Google is much more dependent upon a stronger economy than some of the other companies out there. And there's a company we're going to get to in just a moment that's even more so dependent upon a stronger economy. But with Google, remember where they get all their money from. Advertising, right? Here on YouTube, let's play a YouTube ad. On Google search, right? Think about that for a moment. Like, this is where, at the end of the day, Google's got a lot of businesses, but they get the core of the money that a company makes and brings in through the door is from Google search and from YouTube. And so if companies are cutting back, right, then that's in a situation where Google's just isn't as strong as a position when it comes to their revenue and EPS. So everybody's going to be looking at that. And Google's a stock that's down probably 25% roughly year to date, somewhere around there. So, if it goes down a bunch, I will love to pick up some more shares. I think, it's very rare you get Google to sell off in any meaningful way. But in a recessionary environment, in an environment where everybody's scared about ad spend, whew. So nonetheless, guys, after the bell Tuesday, we're talking about trillions of dollars of market cap is going to move the entire market. And these are two of the biggest weight companies in the world, okay? So yeah, get ready Tuesday after the bell, okay? And that will be what dictates where the stock market ultimately goes on Wednesday, okay? Visa also reports Tuesday after the bell. I think Visa is important to pay attention to. First off, I know we just looked at those companies and it's $3.4 trillion of market cap between those two companies, right? Google, McDougal, and Mr. Softy. But let's not forget, you got another company reporting Tuesday that's a $450 billion market cap in Visa. Visa is very important to pay attention to. The reason Visa is very important is think about if everybody goes out there and uses debit cards and credit cards, what's the biggest service out there? Visa. Amex reported American Express, very strong numbers, incredibly strong at American Express. And the CEO of American Express, he even said he doesn't see a recession. He's like, I look at the numbers on a daily basis and none of the numbers I look at show me a recession. Does Visa have that same sort of commentary? Does the Visa CEO see things the way, everybody else sees them, right? People look at American Express and say, well, American Express, that's kind of like higher end, middle class, or wealthier people in general usually have American Express. Visa is just more of just everybody, right? Uses Visa. So there's that sort of belief we're going to see in the numbers. You've got to pay attention to those numbers after the bell on Tuesday, and that will also shake up the market as well. Before the bell Wednesday, Shopify is reporting earnings. So Shopify, if you want to talk about people look at Shopify to kind of understand Meta, right? And they want to understand if Meta numbers could be strong because a lot of people that have Shopify stores, they do advertising on Instagram and on Facebook, right? So this is a stock that's been heavily damaged, down 72%. But not only that, Shopify is a very important stock to the let's just call it the risk-on place of the stock market. Shopify matters. This was a darling of Wall Street. Let's not forget Shopify stock in 2021 was a stock that was, $1,700 plus at one point, right? That stock year to date is down 72%. It's been devastated. Doesn't mean it can't get devastated more, but it's been absolutely obliterated. That was a darling of Wall Street at one point in time. So everybody's going to be looking at Shopify and they're going to be trying to make judgments on if this market risk on or still risk off. If Shopify tanks on earnings, we're still in a risk off market. If that baby goes up 10, 20, 25, 30%, risk on, baby, and the market's starting to shift, right? Doesn't mean it's shifting like for the next year, but it's shifting at least in the short term. So that's an important stock, even though it's a smaller market cap, $47 billion, just because it's like, is it risk on time or are we still in risk off, right? And we'll know Wednesday during the trading day if we're going risk on or we're still staying risk off. After the bell Wednesday, Meta's reporting. This stock has been literally cut in half, exactly cut in half this year. It's down 50%. It's trading at a PE of under 13 right now. It's the most undervalued big tech of all of them. It's the best risk-reward profile, in my personal opinion, of all big tech. But we can't deny the fact that this is a company that is just as reliant on advertising spend as obviously Meta, as Google McDougal is, right? I mean, look at where all Meta's numbers come from, right? They only sell so many Oculus headsets, right, for VR and all that stuff. At the end of the day, this company's an advertising company. And all those people that are advertising on Facebook and Instagram and maybe even potentially WhatsApp, that's how this company makes money. That's just bottom line. And everything else is just very small change for this company. So, yeah, that one's going to shake up the market for Thursday during the trading day. And if you look at the numbers, there's not big expectations. I mean, this company is expected to grow revenue 3.9%. It's nothing for Meta. It's just a sleepy quarter, let's call it that. The current year, this company's only expected to have 6% revenue growth. That's pretty much the worst revenue growth for a year ever in Meta's history, like just disastrous, right? But next year is expected to get better. 14.6% growth next year is expected. So I think a lot of that will depend upon if we're in a recession in 23, and if we are, how deep it is. Okay, I think that's what's really going to matter for Meta there. Before the bell on Thursday, Mastercard's reported earnings, $330 billion market cap. I still remember when I first started in the stock market, the biggest market cap in the world, I think, was ExxonMobil. And I think that was like a $330 billion market cap. So it's crazy that like a company like Mastercard is just a small guy, you know, compared to all these other big companies. But this, when I first started in the stock market, like this used to be like you were the biggest of the bigs, right? But before the bell, very important to pay attention to Mastercard, right? We'll have had American Express by this point. We'll have had Visa by this point. And then Mastercard's the last of these big transaction companies that you're going to kind of understand where the consumer's at, where they're spending money, not spending money. And then after that, you know, there's no one else in terms of, you know, running debit cards and credit cards that's a big dog after that. There's those three and those three only. So that matters before the bell. Then after the bell Thursday, Amazon's reporting earnings, okay? And Amazon's been hit hard, right? If we're thinking about big tech, big tech, the most risk on play is, in my opinion, Amazon. The second most risk on play is Meta, and those kind of go back and forth for a battle, right? And when it comes to Amazon, e-commerce business, very important. AWS, how's AWS doing, right? We hear about slowdowns in the startup space with funding. Well, guess what? AWS makes a lot of money off startups, right? In the app economy, websites, like all types of different business models in the startup space. Silicon Valley money, a lot of that flows through to companies like Meta and to companies like Amazon, Amazon specifically in regards to AWS, right? So if there's a slowdown there, how much does that slow down AWS's numbers? It's going to be very, very important. So I think, you know, when you look at Amazon overall and also their advertising business, how much are businesses spending on advertising? Like if you're just not getting a good ROI on advertising, you're not going to do advertising, right? So that's something that could hurt Google, that could hurt Meta, that could hurt potentially Amazon. And we're going to find that out in these numbers here. I can tell you Amazon's one of those stocks that if it falls in any considerable way, similar to Meta, I'll be happy to pick up some shares the next week. But, you know, it remains to be seen. People look at Amazon, they're like, it's at a 60 PE. That's cheap for Amazon. I'm telling you. This stock doesn't trade in with the market because it doesn't have this sort of, it doesn't, it has a very different growth profile. And also remember, Amazon's a company that just got to profitability in the last few years. I'm talking about real profitability. Before that, like Amazon's profitability, if you go back, 7 years ago, 10 years ago, Amazon's profitability was a joke. They weren't taking it serious. They were just focused on growth. They just started to become an EPS story and a net income story literally in the past 5 years. And it completely changed the company, obviously. And honestly, it changed the valuation of the company. So that matters in a big way. Then at 1:30, Vegas time that is, 1:30 Pacific time, Apple's reporting earnings. So $2.5 trillion market cap. It doesn't get bigger than Apple, obviously. It's the biggest of the big dogs. The company's trading rich going into these earnings. It's at a 25 PE. It's a stock that, most of the time I've been covering Apple, it's been under 20 PE, and I've seen it as low as, 12, 10, 14 PE. So it's trading rich going into these earnings. It really is. The dividend yield is minuscule on Apple as well. So big expectations for Apple. And here's the situation, okay? Analysts have them growing revenue 7.6% in 22, another 5.4% next year. So, it's really hard for me to see that growth. I'm just going to be honest with you guys. If there's one company that could pull off miracles, it's Apple. But I am having a lot of trouble seeing that growth. I just am. Is the consumer really strong enough to, after coming off these incredible comps, Apple has to comp year over year? Are they really still spending at even more of a sustained rate than they were previously last year? That's just really hard for me to see, man. And so that's one of those companies I'm like, I don't see it in the numbers. I don't know. We're just going to have to wait. We're just going to have to wait and see the numbers. But I'm just like, I don't see how that company grows 7.6% revenues this year. But if there's one company that could pull off a miracle, it's good old Apple. So nonetheless, guys, this week is going to be absolutely insane. And that was just, that's just the big dogs I pointed out. There's a ton more companies reporting this week. Those are just the big dogs. So yeah, I got a little cash on the side. I'm ready to, make some moves if I get those opportunities presented. Qualcomm, this Texas Instruments, there's so many other companies that are reporting this week that matter. It's going to be an amazing week, guys. So yeah, hope you enjoyed this as always. If you're looking to join us in the Prep Stock Group and you're looking to apply to join us in there, that will be pinned comment down there. If you want to learn how to value companies, to figure out if stocks are overvalued, undervalued, understand financial statements, join us in the Discord chat with 6 and 7 figure members, all those sorts of things. Check out pinned comment, apply to join in there. Much love as always, and have a great day. Let's get ready.